This is Quantum Financial with Tim Bresky.
Stocks skid the weight of selling on Wall Street. We're concerned that the tariffs will slow down the global economy. Banks tumble as yields fall, could cut profits, as this is the engine of the economy. The volatility is putting focus on the earnings, and it's pretty clear, and stories and more on Quantum Financial for a week of Monday, August 12th to Friday, August 16th. This is Wednesday, August 21st. I welcome you, everyone. Here we go again. Stocks plunged on Monday, then Tuesday gained it all back, then on Wednesday lost over 800 points. Over Thursday and Friday, the U.S. stock markets tried to gain all the losses toward the end of the week. This was another volatility week for the markets. How the stocks have been trading around the world lately. Investors have been more concerned over the trade war. United States and China will go on for a while. China threatens tariff retaliation if U.S. has plans for more tariffs on September 1st, further damaging the global economy. If that wasn't enough of the global economy in the world, Hong Kong, the ongoing 10th week of political protests causing the Hong Kong International Airport to shut down. Catholic Pacific Airways CEO has resigned, China media reports, and Hong Kong financial markets are unrested. Investor settlements in Hong Kong are unsettled. The United States Treasury bonds were hit the hardest, sent most to a multi-year low. Some analysts have become worried and a recession may be in a glimpse in the near future. One analyst said that this week that the Wall Street bear is alive and cooking. There is no doubt there is plenty of news going on in the global markets. The Argentina's stock market exchange plumbed more than 30%, and their peso sent the currency of a quarter of the value down. A lot of news to digest, and it's no wonder why investors are flocking stocks and going into bonds, putting pressure on bonds and pushing yields lower and putting serious pressure on the bank stocks to result in that. Bank of America and Morgan Stanley declined more than 2%. There are more of the downside to come with the bank stocks, with interest rates going to a multi-year low and further downturn. As the 30-year bond yield goes lower, it hurts the bank's profitability to go lower. The worse the economy gets puts on the Federal Reserve to lower short-term rates, the 5 and the 10-year bonds. This would also lower bank profitability, slow credit going slower to a trickle. Rates have gone lower for more than a decade, and banks have learned to deal with that. Fundamental reports were good, but yet the market keeps tanking, and the banks lower to what to do if the bonds were lower to punish the banks. Banks are macro sensitive. Fee income to the banks may serve as some insulation. Lowering the rates are still going to hurt the banks. There could be a rise when the markets turn to a rise of credit costs. There are a number of things that can go wrong from a standpoint right now. If the markets stay the same and nothing goes wrong from the time being, the earning projections have played a big major role in the war tariffs. Banks, energy, and industrials will get hit the hardest, and also want to keep an eye on those sectors, as these sectors will remain flat. In addition to tariffs are starting to impact the energy sectors, the industrial sectors. Energy has gone down 21% from 13% in July, of what analysts have forecasted. Industries have gone up from 6% earnings a few weeks ago, and now only up 2%. Other sectors forecast are also coming down. Financials, which have hit the lowest interest rates, and retailers, which include apparel makers L Brands and Gap, are trending to be down now. These retailers have been weak for a long time, like PVH, L Brands, Gap. Tiffany and Company, which only gets 15% of their revenue from mainland China, have seen a decline of more than 7%. Big Tech Apple Incorporated, 1/5 of their revenue comes from China. But all these together, positive or flat, could now see a negative profitability in all these sectors. The word recession is being whispered on Wall Street. Bank of America, Merrill Lynch used these words during the week. Even though the bond market have seen a tumble this week as a forecast of a recession, the stock market does not see that. The market right now is very dazed and not sure what to think at the time being. Consumer index is very high, which is a good economy key outlook. The unemployment is very low, which is also a good indication of a good economy. And the market data is always backwards looking. And bonds are always looking forward, looking out. That is the outcome of the markets as a whole of the economy. Best places to put your money to work as a global outlook. The best place are still the United States and good quality companies who have been here for the test of times, like Johnson & Johnson, Apple, Procter & Gamble, Avi, Caterpillar, Honeywell, Public Storage, regional banks. A diversification is always key in any portfolio when you're looking at the glass half empty. Look at the glass inside with the glass half full with a multi-sector covering, so it's an additional protection of any down market that may come up to help you get hit not so hard. There are over $30 trillion in assets in the American stock exchange markets, the biggest around the global market. Best game in town. Please don't put all your eggs in one basket. Towards the end of the close on Monday, August 12th, there was a trending computer glitch. Not clear if the volume was reported. Some of the prices of the index were affected. You might have seen different numbers elsewhere. At the close of Friday, August 16th, with the Dow gained 306 points, down to the close of 26,000. The Nasdaq gained 129. S&P went up 41. And my portfolio was up 305. Let's take a look at my portfolio as a whole for this week. For my M1 individual account, which was telecom, it was up 1.5%, 1.43%. My biggest loser was materials, down 3 3/4 of almost 4%. My buys for the week: there was a glitch in my deposit for my individual account, but my deposit went in for my Roth IRA just fine. But it is very small size. I was planning on putting $109 and a penny in to work in my individual account, but Friday, August 23rd, I will make up for it. I bought SK Telecom, a South Korean company, bought 11 cents. Tesla Corporation, a Canadian telecom company. Royal Dutch Shell, I bought 7 cents worth. Orange Telecom, a France Telecom, I bought 6 cents worth. China Petroleum, I bought 15 cents. Dividends I like to mention for the week. Were Nokia, NOK, for August 13th. $12.35. Even though it says 1764, you got to subtract the fees because Nokia is a Finland company. August 14th. Sunco, $19.81. August 15th. Kaiser Aluminum, 45 cents. As you can see, with each and every dividend I get, it goes right back into many companies. I pick to find opportunities at the very best prices. Best prices mean better yield on cost. Better yield on cost means more dividend payments per share, meaning faster to be retired. Let's look at my Roth IRA now. My biggest winner was utilities at 1.16%. My biggest loser was healthcare at 1.83%. Let's look at my buys. Like I mentioned, my deposit went in fine on this side. As you can see, $185.60. I bought, click here, Simon Properties at $23.67. I bought AbbVie, amount of $61.81. I bought shares of iShares High Yield Corporate Bonds at $9.81. Westpac Banking, I bought $61.92. Newell Brands, I bought $29.14. I buy my own stocks. I mean, I can't make the price on M1, but I put in the percentage amount, and I figure out the dollar amount that I need. And I have a formula that works for me. It might not work for you. Now let's look at my equity stats. I enjoy going to this a lot. It breaks down my whole portfolio as a whole. If you see on my holdings, in the far right side you see dividend yield here, which is right here. Meaning how much I get for all the shares. For example, AbbVie, I have, whoops, what did I do? I got AbbVie at shares of 2.4014 shares. Dividend yield at 6.64%. With a dividend per share right now is $1.07 a share. That's $2.56 right there. And the great dividend cost of $6.64%. Where can you get a high yield at a bank savings account for 6.64%? You can't, not even close. It just goes to show you, companies that pay dividends in a sum game, you will win in the end. Let's scroll down so you can see all the results of my stock portfolio. This includes my M1 accounts, my Roth 401k, and my Acorn accounts. I know it's very long, but over time I will get dividends in each month, and no matter what. I have like 10 more companies I still have on my radar list to complete my whole portfolio as a whole. It takes years and years to have an all-weather portfolio. Ray Dalio, a very profitable hedge fund company, Bridgewater Associates, has an all-weather portfolio list. he put together for the average common person. Not much in return as in gains, but it will help from being hit over 20 to 50% down. His list consists of 30% stocks, the Vanguard stock market ETF symbol VTI is a good place to park 30% of your money. 40% in long-term U.S. Treasury bonds, the Vanguard Extended Duration Treasury ETF symbol EDV is a very low maintenance fees of 0.07. So for every $1,000, it's only $70 a year. 15% in intermediate term U.S. Treasury bonds. I think the iShares 70 to 10-year Treasury ETF symbol IEF is a good place. 7.5% of gold symbol GLD is a good place. Is a good one for the hedge against the downturn. 7.5% in commodities symbol GSG. iShares All Index Trust Commodity, another hedge over cover you for the downturn market. Let's go into depth of my portfolio, more in depth. Right here, let's go more in depth. Sorry about that, I had to log back in. I have a total value of $25,612.49. A return of 12.77% year to date. Last year was a very crazy, never will happen ever again in my lifetime. As you can see, it went up, skyrocketed over 1,000%. I have good track record for the last 27 years. All I will get is the best, and I will beat most hedge fund companies. No portfolio is perfect or great, but the key is diversification. My top 5 best returns are Starbucks at 72%, Southern Company 33%, McDonald's 32%, AstraZeneca 24%, and Sunco at 23%. My biggest holdings is from my Roth 401k still. At 18.9%, which is slowly going down. A week or so ago, or maybe a little longer, I wanted to get the percentage weight down to 5 or 7%. In order to do that right, I need to buy more shares in other companies. I don't like to be overweight that high, even at 18.9%. It's way too much and too much exposure. My best investment year to date, let's go down here, is Starbucks. My worst quarterly investment is Vale. Is a mining core company and is the largest core in the world in Brazil. My dividend totals now. My dividend total, I have surpassed last year's market now. I have $387.52 of this year. Last year, $359.89. That is past free income I have collected just by buying shares and never selling the shares. Sunco, right here, is my biggest payment this year of $59.43. Sunco is an LP holding, which they will send you a Form 1065, a partnership form. So keep that in mind. So if you have any questions on any of my holdings, please shoot me a question in comments and I will be happy to answer them for you. Before we go, a final look at Wall Street. Dow gained 306 points, Nasdaq gained 129, S&P up 41, and my portfolio up 305. The weekly performance. The Dow down 1.5%, NASDAQ down 0.75%, S&P down 1%. And my portfolio down very slightly at a modest 0.5% at 0.23% down. Please leave a comment below if you enjoyed the show today. Don't forget to subscribe to my show. Make sure you hit the subscribe button below to click on the bell and turn on the notification. I love comments and feedback. It means the world to me. I want to mention the stocks today I'm long on. Symbol SKM, SK Telecom. Symbol TU, TELUS Telecom. Symbol RDS.A, Royal Dutch Shell. Symbol ORAN, Orange Telecom. Symbol SNP, China Petroleum. Symbol SPG, Simon Properties. Symbol ABBV, Abbey. HYG symbol, shares, iShares, high yield corporate bonds. WBK symbol, Westpac Banking. NWL symbol, New World Brands. I own these in my stock portfolio. You are invited to join the community today, as simple as subscribing and clicking on the notification bell. It alerts all new shows. Join the discussion. That is it for the Quantum Financial Show for today. I'm Tim Brusky. Thanks for watching. Have a great day.